But let's talk about what's happening globally with Peter Cardillo. He's joining us this evening on India Tonight. Peter, appreciate you taking your time out and speaking with us today at ET Now. So we're seeing after the massive sell-off yesterday, which was mostly on account of the concerns over the virus, and of course the yields also declining quite a bit, some bit of a recovery coming in. What has changed in the last 24 hours? Why are we seeing a rebound? And, talk to us about some of the concerns regarding, of course, the Delta variant, the new mutant strains, and how they could impact the recovery as well.
Yeah, well, look, I think the market finally came to its senses. Yesterday the market was down sharply due to fears over the possibility of the Delta variant slowing down the economy. And of course, we did have some macroeconomic news that was a little bit on the soft side. And so I think the bond market, overreacted. And as a result of that, stocks got hit. But I think it was just a perfect excuse to take some money off the table. What really changed from yesterday and today? Nothing. And we see that the yields are moving back up. Stocks are regaining almost all of their losses, if not all of their losses. And we're seeing that every sector is participating, in spite of the fact that President Biden is set to sign an executive order, clamping down on tech stocks, and yet we're seeing the tech stocks performing positively along with the other sectors. So I just think it's a market that was a little bit high. It was at a high point, needed to pull back a little bit, and the excuse, of the virus perhaps slowing down the global economy was able to cause that little bit of a pullback. And today, of course, we've reversed. And like I said, I think it's just the fact that the bond market has got this economic outlook a bit wrong at this time.
Given the fact that we're talking about economic outlook, is there also perhaps a realization that the second half of FY22 is going to look very different from the first half? There was, of course, a lot of optimism in the first half. After we did see a resurgence of the virus coming in, things kind of stabilized. We had a better vaccine pool available as well, and that gave hopes, and that stoked hopes of a recovery. But in FY22, the second half, the focus is going to shift on, what kind of earnings momentum we are going to see, what kind of margins the companies are going to have.
Yeah, I'm glad you mentioned that. That's a very good question, because guess what? Next week we're going to begin to get some insight on earnings. Second quarter earnings begin next week. We have the banks and some of the industrial companies reporting, and we're looking at earnings that are probably going to be comparable or even a little bit better than the first quarter earnings. And so that in itself should be a cushion for the stock market. And as far as some of the macro data, we have next week industrial production, retail sales. Retail sales obviously will measure the pulse of the consumer, and we're expecting them to show a reading of about 0.3%, ex autos about 0.1%, which is not all that strong, but certainly indicating that the consumer is not pulling back. And another thing I want to mention: yesterday we saw a fairly hefty rise in consumers' credit. So that's a good sign. That means consumers are going to continue to spend. They're not pulling back. And that's 2/3 of our economic growth.
Okay, all right. On that note, Peter, appreciate you taking your time out and speaking with us. In fact, all eyes will be on the earnings season that kicks off from next week.